Welcome back, you legends. I'm Dr. Khan. Let's get right into this video. The stock market yesterday, everybody, was up 1.2% on the S&P, up 0.8% on the Nasdaq, and up 1.34% on the Dow Jones, with the Dow Jones continuing to lead the stock market to the upside. Let's take a look at the different sectors. Leading were defensives and healthcare. Lagging were cyclicals and basic materials. So, despite the rally that we saw in the stock market, this is warning that it was a risk-off rally, a defensive rally. A defensive posturing is taking place in the stock market, with really big money players positioning themselves for potential weakness in the stock market. Let's take a look at the S&P 500, everybody. It's 6:17 a.m. Eastern Time, and the stock market is slightly down in the pre-market. Pay no attention though to the majority of pre-market trading. The window that matters is the last hour of pre-market trading between 8:30 and 9:30 a.m. Ignore everything else. This is just something that I have learned from my experience in the markets, is that the price action will be misleading until the last hour of pre-market trading. Now let's take a look at the daily chart for the S&P 500, everyone. And the market saw a decent rally yesterday, a continuation of the upside, just as we expected last week after the Wallstreet Journal article came out. We expected that the market will continue to rally off the reignition of the Fed pivot rumor, narrative, / whatever you want to call it. So the market continues to run on hopium, hoping that the Fed will pivot. I'm in the camp that they will not pivot at all. But we also don't want to fight the market. So if it wants to rally, let it run. And when it's the right time to short, we will short. In fact, yesterday, everyone, we took a decent sized long position in the stock market in a specific name that I'm watching, and we booked a nice 10% profit. By the way, everyone, this is what the trading community looks like. I post every single day, pre-market, intra-market, and post-market real-time analysis. Yesterday was a decent day for us, ended with some decent profit, continuing our incredible 0 losses winning streak, knock on wood, for October. We've had 0 losses so far in October, despite October being infamous for its incredibly high volatility and being extremely difficult to trade. If you're interested in joining our trading community, please check out the link in the description box below the video. Under Money Time Machine, we have 7 different rooms. I'm the only one allowed to post in these rooms. In my trades, I post every single trade and investment that I make in real time. Live analysis is where I post my live daily stock market analysis. Investment ideas is where I post my investment ideas. Watch list is where I post my weekly watch list and weekly expected moves for the stock market and different stocks in the stock market. Videos is where I post member exclusive videos, including a guide on how to set up the CPC buy and sell signal. Trading resources, where I post learning resources about trading in the stock market. We also have a members area where members can discuss the market, news events, discuss different investment ideas, trade ideas, as well as our legendary trading room where only our best legends are allowed to post their trades. We also have a question and answer section where you can ask me anything you want about anything, and I'll do my best to answer as quickly and as best as I can. As of yesterday, we reached our 1,000 member cap on our Living Legend membership tier. This is our VIP membership tier where you get direct access to me 24/7. If you're interested in becoming a living legend, please message me on Discord to join the waiting list. I'm also launching a brand new premium membership called Ghost Legend. Ghost Legends get access to my live trades and my daily analysis, but they will not be able to interact with other members. And that's because I want to make sure that I maintain the same high level of quality in the trading room, and capping the number of members who can post and interact to 1,000 will make sure that the channels do not get flooded with an overwhelming amount of posts and comments, making it difficult to follow. The Ghost Legend membership is $30 per month. If you go for the annual membership, it's a little bit more than that for the monthly plan. All the details will be in the welcome page on our Discord server. I also need to warn everybody, be very, very careful of scammers. They will impersonate me and message you on Discord asking you to sign up for things, asking you for money, and all sorts of things to scam you. Be very careful. As a rule of thumb, do not respond to any direct message that you did not initiate. I will never message any non-subscribing member asking them to sign up for anything or ask you for money or ask you to message me anywhere. So be very careful, everyone. If you're in doubt, just click on my name and send me a message directly. I am incredibly humbled and thankful for every single person who has supported me since day one on this incredible journey. Thank you so much. I never imagined that I would see 1,000 active members in here. And so I never thought that I would need to cap the membership count, but I hope it's the right decision just to maintain the same level of quality. And over time, I will expand the number of available slots to allow a steady trickle of new living legend members, as long as it does not detract from the quality of the trading community, which so far has been absolutely epic. And don't worry, if you sign up for a Ghost Legend membership, you will be able to upgrade to the Living Legend membership as soon as a slot is available. Thank you again, everyone. Thank you so much. 10,000 subscribers, 1,000 active members in the trading community. It's been an absolute blessing. Thank you so much, everyone. And so let's get back to it. So up above everyone, the blue line is the upper weekly expected move. Down below is the lower weekly expected move. We've already rallied towards the upper weekly expected move. We do have some potential upside left. We've entered this very dangerous level of resistance, this box where we've seen a lot of breakdowns in the past, but it could also act as an acceleration zone. Notice this gap right here. We gapped up and ran, and notice this quick breakdown. So this is an obvious acceleration zone where we can get really quick price action in either direction. And we do have big company earnings coming out after the market close today. We have Microsoft and Google, as well as Visa, Texas Instruments, Skechers, Spotify, Enphase. A lot of big companies reporting after the market close. Microsoft and Alphabet will be market moving earnings reports. So be very careful not to get chopped up. Sometimes it's very tempting to try and trade these earnings reports. I prefer not to do that. That's gambling in my opinion. And we don't like to gamble on Money Time Machine. We'd rather wait for these earnings reports to come out, for the implied volatility crush to occur in the options chain. So we get the options much cheaper after the earnings report is out. And then we can decide either to go long or short. That's the right way to do it, in my opinion. Now, there's a very interesting warning sign, again, that aligns with this sector rotation that we're seeing, this defensive sector rotation. And it's in the smart money. Again, the smart money continues to show us the way. And we're seeing a nasty divergence here. Look at this, everyone. The S&P 500 took out this high as we expected last week. If you've watched my last video, I did say that the stock market will very likely take out this high, and the high yield bonds, the smart money, will fail to take out this high. And that's exactly what happened today. Because if you think about it, who would have benefited from that Wall Street Journal article? It's the big money. And so very likely they will use this fake rally, this fake pump to the upside to unload positions. So be very careful this week, especially as more earnings reports come out, and especially as we approach that November 2nd FOMC Fed rate hike decision meeting. That will be the moment of truth. Now imagine if Jay Powell comes out on November 2nd and says that the Fed will not pivot, that the Wall Street Journal article was fake news, was nothing more than a rumor, was fake news. What do you think is going to happen? Well, we're going to end up with another soul-crushing crash, just like the Jackson Hole sell-off. So is Jerome Powell going to dish out another sobering reality check, sending the market tumbling, or is he going to buckle and hint at a pivot and we can see the market continue to rally? I'm leaning more towards the cautious side, especially as we're seeing distortions in the stock market seasonality. The last week of October tends to be the weakest week in the entire year, seasonally speaking, especially in midterm years. And so it is very possible, guys, that we are seeing the market pull forward the early November rally. That could very well be what we're seeing right now. And we could end up with a crash after the FOMC meeting. So just be very careful. If you miss out on this rally to the upside, that's totally fine. We're going to see so many other opportunities. It's so much better to protect your capital than to go into the FOMC meeting betting on a rumor that's not confirmed by any means or any stretch, especially again as the smart money is warning that weakness is likely coming ahead. Now let's take a look at the VIX, and the VIX also continues to warn. Even though the stock market rallied yesterday, the VIX actually closed higher than it did on Friday. So again, the VIX is warning that hedging positions are being opened. Big money is opening a lot of hedge positions, a lot of puts in the market because they have no faith in this rally. Let's take a look at the dollar index, and the dollar index actually broke down below this intermediate support line, allowing the market to potentially continue to rally as the dollar index moves down to this white space. We do have bearish momentum on the dollar index, and as the dollar continues to weaken, this will allow the stock market to continue to rally. Let's take a look at the 10-year yield. Again, another breakdown. As soon as we saw this rejection candle on Friday, we suspected that the market will rally and that the 10-year yield will break down. That's exactly what is happening. The same thing is happening, everyone, with the 2-year yield, a double top as we expected with negative divergence, and it's breaking down, again allowing the stock market to rally. So even though the smart money continues to be cautious, we will still likely see the stock market attempt to push higher in the coming days. Now let's take a look at one of my favorite ratios, gold divided by the S&P 500. This is a risk on, risk off ratio, and it continues to be squarely in risk on mode. Every single time we had a bearish crossover on this ratio, the stock market had a nice pop up to the upside, a nice rally to the upside. There is still no sell signal on this ratio. Let's take a look at another chart. This is stock market breadth. The percent of stocks above their 200-day moving average is up top. The S&P 500 is down below. And we were talking about this monster bullish divergence for a very long time now, for several weeks. Fake rally or not, the market wanted to move to the upside. It's going to be very interesting to see where this rally fails. And if it fails on the FOMC meeting on November 2nd, we might end up with a very, very bad November-December stock market period of weakness. Let's take a look at Apple. Apple is establishing a very clear uptrend here, everybody. Higher highs, higher lows every single day. We've seen the exact same setup back here after the June bottom, where Apple continued to outperform the stock market and form this very well structured ascending channel. We're still seeing the same thing. We've hit the upper edge of the ascending channel, and so we could see a retracement today or even tomorrow to the bottom of this ascending channel. Be very careful and be very aware, everyone, that Apple will report earnings after the market close on Thursday alongside Amazon. So we have a lot of risks this week, and I'd be way more cautious holding Apple into earnings, even if Apple beats on earnings, everyone. Don't expect the stock to just shoot up, to gap up to the upside the next day. This is not what happens with big companies like Apple, massive multi-trillion-dollar companies. So it's better to get out of the way, allow the implied volatility to crash after the earnings, and so we can pick up really cheap options contracts. Now let's take a look at the CPC put to call ratio buy and sell signal. This is my own variation of the signal that I've been working on for a very long time now, refining it and improving it, and finally I came up with this variation that so far year to date has been 100% accurate in marking stock market reversals. The way to read this signal, everyone, is this. For a sell signal, I need to see the 5-day moving average on the CPC trading below 95. Then I need to see it cross above 95 as the PPO crosses up. That will trigger a confirmed sell signal. For a buy signal, I need to see the CPC trading above 1.1. Then I need to see it cross below 1.1 as the PPO crosses down. This confirms a buy signal. Now, year to date, if you've been following this signal and nothing other than this signal, trading at the money vertical spreads, both puts and calls depending on whether it's a buy or sell signal, you will have made over 400% in profit. In fact, just in this downtrend, we made two 100% profit trades. We shorted at the top, we got out here, we shorted again here, and we got out at the bottom, making nearly 100% in each of these trades. Again, check out the link in the description to join our trading community, where I've posted a member exclusive video on how to set this signal up and how to read it, because it's a little bit complicated to set up on TradingView. Let's take a look at the economic calendar this week, everyone. Today we have consumer confidence coming out at 10 a.m. Tomorrow we'll have new home sales. Thursday we'll have the GDP growth rate revision. And on Friday we'll have the personal income and the dreaded PCE, personal consumption expenditures figure, the preferred inflation figure by the Fed. And just a few days later, the Fed will determine whether to raise rates by 75 basis points, which is the highest likelihood, or whether to raise it by more than that or less than that. And this PCE inflation figure, if it comes out hot, it will very likely put an end to this small stock market, bear market rebound. Let's take a look at the fear and greed. We're sitting at 50. We went from extreme fear to neutral. We will likely drift into greed before the market reverses again. We're getting closer and closer to hitting that 125-day moving average, an area where we saw rejections in the past systematically. Stock price strength continues to move up. Breadth continues to improve. Put to call ratio continues to move down. If we continue to move down back to 0.8, that will likely mark a beautiful entry to short the market yet again. Market volatility double topping, slowing down slightly. We will likely see it move all the way back down to the 50-day moving average as the market continues to push to the upside. Safe haven demand declining. Stocks are outperforming the bond market. Junk bond demand is rising as the yield spread between investment grade and junk bonds declines. That's all I have for you today, guys. Thank you so much for watching, and I'll catch you the next one. Bye-bye.
Oh, wow.